She thought she was doing everything right until the IRS came knocking. So let's break down how one tax audit destroyed her entire business and what you need to do to avoid the same mistake. Hi, I'm Chizaba. This is Zaba's Wealth Lab, your guide to real world finance and a space where we encourage creating wealth fearlessly. Today, we are unpacking a true cautionary tale. So, pay attention, let's dive in. The person for our case story or case study today was a business owner, a young lady, and she hired a family member, a cousin specifically, to help her around the office. In the paid position, she paid her cousin. And because it was a family member who was quote unquote just helping her, she was very fluid with the payments. She did not report them on her business finances. It wasn't on payroll. She didn't file a 1099. Sometimes she just went to the ATM and took money from her personal account. Sometimes she took money from the business account to pay her cousin. So the payment arrangement, there were some payments, but it was really, really fluid. And so that's the scenario. And then what happened? So one day, an unhappy client filed a complaint against her business, and the result of the investigation, as a result of the investigation, she was required to provide some information, including financial reports, her tax returns, so on and so forth. And they discovered something looked odd, including her cousin that kept coming up in the complaint and in the story. They could not find documentation that tied the cousin as an employee or contractor for the business. So, what started as an investigation due to a customer's complaint became a full blown tax audit. And let me press pause here. Sometimes, as small business owners, we forget that systems and institutions, especially here, are interconnected. And so while the agency or the body or organization that was responsible for investigating the customer's complaints was not the IRS, they can report their findings to an agent, to the appropriate agency if they believe there's been wrongdoing in another area. Or something they were looking into can tip off that other agency, not necessarily just the IRS. So that is something to always keep in mind, that systems, agencies, institutions here are interconnected. And so she went into the tax audit, they discovered a lot of things, and the result was a tax bill so high that she really couldn't keep her business open. The time and the effort that went into the audit, how it disrupted her business, and then the resulting resolution, it was just too much for her. And she had to, unfortunately, shut down her business. So, what went wrong during the audit? Her accounting and bookkeeping was not clean. She did not have proper financial records, not just for her cousin, but just for the business as a whole. Things were very wishy washy and nothing tied to anything. And it was very inconsistent. Her accounting and her bookkeeping was very inconsistent and was not clean. She failed to separate her business and personal finances. Every single time I talk to business owners, especially those who are venturing into business, it is very easy to open a business account. I always preach separate accounts, separate accounts, separate accounts. Even if your personal account or your personal funds are funding the money, transfer the money from your personal to the business account. Make sure you list the transfer on the books as such. Don't book it as as income, and definitely do not book it as an expense. But you want the books to be clear. Everything has to be crystal clear, down to the cent. This expense came from here to there. This was payment from so and so customer, or so and so system like PayPal, or this was a transfer from so and so. This was a loan. This was an injection of funds into the business. You want your bookkeeping to be very accurate, to be very clear, and your personal and business finances separate. Also, if your business is registered and your finances are not separated, in the case of an audit or a lawsuit, you are opening yourself up for having your personal finances be a target. So if you have an LLC, a limited liability company, in the event of something, the idea for that business type is that those funds are limited. Whatever the funds in a lawsuit, just using lawsuit as an example, it's limited to what the business has, what is in the business account. But if things are wishy-washy with you or with your business, or you are more or less operating out of a personal account, they are going to dive into your personal finances and you risk opening up your personal assets and funds up for liability. So keep finances. She did not keep finances separate. She did not comply with payroll reporting requirements. If you pay somebody more than $600 to do something official in your business, they have to get a 1099. You must file a 1099. It is not an option. Whether a family member, a friend, a child, or what have you, if for the whole year you have paid them more than $600 or more, you have to file a 1099 or put them on official payroll. And she did not keep receipts for a lot of things, even things that were sometimes you use your personal account to buy things for the business, like a let's say you shop on Amazon and use your personal credit card. You need a receipt that shows this is what was purchased, that it is tied to a business. A good rule of thumb is to have a receipt for anything more than $75. But that is what went wrong. And so, more or less, we've talked about what went wrong and I've sprinkled in what should have been done better. But just to add some more flesh to the bones, common mistakes to avoid. Do not ignore tax deadlines. Keep records, keep proper records, and seek professional guidance. Chat GPT and the web and Google and so on can be great for information, but they lack nuances tied to your specific situation, and a good professional will be able to guide you better and tell you things and customize the suggestions and advice to something that works for your business. Make sure you protect your business, maintain organized records, pay yourself legally, report payments you make to others properly, have constant check ins with a tax professional, make sure your books are clean. Do not ignore tax deadlines. Like these are really, really important. Make sure you are compliant, you have receipts for everything. And once again, I cannot emphasize it enough that your accounting, your bookkeeping is clear and clean, and your business and personal finances are separated. So I hope I've been able to help you. I hope I've been able to give you tips to help you, small business owners, to generate wealth as you do what you do. Do not wait for a tax audit to learn the hard way. You want to put things in place now because there is no telling what might happen. And I do not wish an audit on anyone, but in the event that it happens, that you have everything you need to go through that process, as stressful as it can be, but to come out on the other end of it successfully. Share with someone who you believe needs to hear this. Like and subscribe. Go forth. Be great at what you do. Create wealth fearlessly. And I will catch you on the next video.